Live from New Delhi, this is Insight with Haslinda Amin, where we will dig into India's fast-rising artificial intelligence ambitions and the shockwaves hitting the country's storied IT giants. As India hosts one of the world's biggest AI summits, we speak live with Schneider Electric CEO Olivier Blum, ServiceNow President and COO Amit Zavery, and Fractal Analytics co-founder and CEO Srikanth Velamakanni about how this technology is reshaping the world. And we bring you more from our conversations with Microsoft President Brad Smith, Google DeepMind CEO Demis, Hassabis and other leaders driving the global AI race. Asian stocks rising with tech in focus. Let's do a check-in on how markets are faring with Avril Hong in the Lion City. Avril.
Yeah, we are seeing Asia Tech doing pretty well today, but let's also run through what we saw in the U.S., right? Because we did get those Fed minutes for the January meeting, and it showed you that officials seem a bit less worried about the labor market. They were disappointed, it seems like, by the slower than expected pace of disinflation. Some even talked about those rate hikes to come, and then you put that together with the, U.S. data overnight, which also showed a resilient U.S. economy, including the industrial production figures, and you get these hawkish bets on the Fed for the next couple of months. The reaction function was via the dollar, which rallied, and the major currencies, all of them lost ground against the US dollar. Bloomberg dollar index now is flat. The yields are still supported, pushing above the 409 level on the US 10-year. What was really interesting was how stocks still climbed against this backdrop, and the tech sector rebounded, futures pointing flat. Now I'll flip the board because maybe all this points to this hawkish talk being a bit of a moot point if we're focusing on the back half of the year, and we could get a dovish Fed under the leadership of Kevin Warsh. So maybe that's what's informing the Asia stock rally today as well, with the Japanese benchmarks extending gains for another day. South Korea's Kospi hitting fresh records. But really, as you said, tech is in focus, and the likes of Samsung Electronics, really the wind beneath their sails. Take a look at this chart as well, because this tailwind you're getting for the chip maker in South Korea is coming from local media reports. Chosun Ilbo that it could be pricing its HBM4 at around $700 a unit. So this would represent a roughly 20 to 30% increase from the HBM3E, which is what it is currently. And Bloomberg Intelligence has already pushed up sound analysis on this. Could mean operating margin of as much as 60%. And all this speaks to the idea that following on from the 2024 doldrums for Samsung Electronics, remember that? It's really managed to shake off the idea that it has been lagging its rival SK Hynix. Not only has it rebounded today to hit those fresh record highs, you look at this chart, it also shows you the ratio versus the Kospi and how that has also been hitting high. So it really speaks to the dominance of this memory maker in South Korea at a time where tech is certainly in focus. Has?
Avril Hong, we thank you so much for that. Now let's stay on tech. Mistral AI CEO Arthur Mensch says betting on open source models in the new technology could be a winning strategy for India. He spoke to us on the sidelines at the India AI Impact Summit.
They absolutely have the skills. They have the skills everywhere on the stack. So what we see is that on the infrastructure side, India has taken a strong stance on sovereignty, and so that's a place where we can play an important role, because the platform we bring is something that every state we work with can actually customize. So in that respect, I believe there are a lot of synergies in between what we can provide and what India already has. They have taken some step in training models themselves as well. Again, this is a place where the open source model that we can provide can play a role, because they can be used as a basis to make models better at certain languages. This is something that we actively do with certain states, that we've done with Singapore, that we are doing with Morocco. We've released a model last year called Mistral Saba, which is specifically good at Indian languages in text. And so that's something that we can improve through partnerships with Indian companies that have access to more data. The audio models that we've released, Mistral in particular, is very strong at Indian language. We see audio as a big way in which the consumer market in India engage with technology. And so again, that's a place where partnerships can actually take us much further, because we can provide the technology and the training stack and the GPUs and the people that know how to train models. But what we could benefit from and what we could partner on is access to data, access to the consumer market, so that we can make that technology better and put it in the hands of, for instance, the Indian government.
The framing right now in AI is that race between the US and China. Where does India fit in?
Well, I think it's the wrong framing. I think the right framing is really in between centralized technology with closed source models and decentralized technology with open source models. And there, I would say Europe and China are playing a role, and we are I'd say, competing or collaborating, you can say, with other labs that are releasing open source models and building on top of each other. So I'd say the way India should probably look at this problem is that it's a safer bet to bet on open source technology, because they will have ability to customize the models that are open source to the cultural nuances of India, ability to deploy them on local infrastructure, then potentially on the edge as well when it comes to deploying it on mobile phones. And so betting on open source is something that Europe is doing actively and heavily. It's something that India can actually do to its benefit. And
you think the India model can be a template for the global south?
Well, I would say yes. We do work with countries that are taking similar bets, like Morocco is betting on open source to serve their citizens, the Moroccan state, Moroccan companies as well. And so betting on open source technology to customize it and to deploy it on local infrastructure is something that is extremely relevant in Europe, extremely relevant in Singapore, extremely relevant in India, in Africa. And is it a template for the global south? I don't know. It should be a template for the world, really.
I want to talk about what we're seeing right now. Given the AI boom, we're seeing a deepening shortage of chips, and the likes of Elon Musk and Tim Cook have come out to say that it will impact all technologies, all production. What's your take on that?
It is true, we see some shortage in DRAM and in hard drives as well. That is starting to have an impact on the market. We have secured supply, so we are not worried on our side, but it's certainly driving the prices up. And again, it also means that companies and states should think about procurement of their hardware and technology in a closer way, because the problem that they may run into is that if very big companies are acquiring all of the chips or all of the memory or all of the hard drives, then suddenly the small players will have less access to the market and they will suffer from a price hike. So we try to make sure that this is not the case for us, and so for this we're very confident. And we also work with our customers that wants to deploy on-prem, for instance, to make sure that they think about the problem relatively early.
Do you think the chip crisis is about to get worse from here?
I don't know. I think we see that upstream of us, there are some investment on new fabs, for instance, but effectively that's going to take some time. But yeah, it's definitely affecting the market, and we look at the supply chain as a whole. So not only do we look at the servers that we buy, but we also look at the chips, at the memory, at the hard drives. So we're really going deep down the procurement stack to make sure that on the supply side we are actually not bottlenecked.
But in terms of the overall AI build out, might that be impacted?
It might slow things down at some point, I would say. There are other bottlenecks that are rising that are more related to the grid. It's especially the case in the US. Europe has a lot of opportunities in that the grid in Europe is great, and so we can quickly build out capacity and large data center facilities. And so that's a big opportunity for Europe, and it's an opportunity that we're proposing our services to capture.
Mistral AI CEO Arthur Mensch speaking to Limbo, of course. Plenty more ahead. Keep it here with us. This is Limbo.
Welcome back. You're watching Insight, coming to you live from New Delhi. Now, India's Tech Minister Ashwini Vaishnaw expects more than $200 billion of investments in the AI sector over the next 2 years. This comes as Anthropic begins a partnership with Indian firm Infosys to build custom AI agents for companies. Qualcomm says it will invest as much as $150 million to support India's AI startup ecosystem. And the Adani Group says it plans to invest $100 billion by 2035 to develop data centers. Our next guest runs French industrial giant Schneider Electric, which is involved in energy management and industrial automation. Let's bring in CEO Olivier Blum. Good to have you with us.
Good morning.
We talk about this insatiable appetite for energy because of this AI boom. How do you see energy demand evolving from here?
Well, look, first of all, even before the AI boom, energy demand was high. In many countries in the world, you are facing situations where there is peak load, where there is shortage, or even before AI, that was a problem. Now, of course, when you enter in the world of AI, AI means more computes more energy. But there is good news in all of that. You know, we have been Schneider Electric for 10 years working on electrification and digitalization to make energy more efficient, and AI is also part of the solution. What I mean, if you apply in a simple power systems, you know, a level of automation, a level of digitalization, which is amplified by AI, we can help to save 10, 20, 30% in every single home, building, industry, infra, and data center. So that's a path also to bridge the gap between the demand and the supply.
You say you have the solutions. The solutions lie in the demand rather than the supply.
I'm absolutely convinced. You know, I've been one of those people who were highly involved, you know, when the Paris Agreement was signed 10 years ago. And we loved it because that puts a lot of focus on the world on the topic of energy. Unfortunately, at the beginning, it was only about supply. And of course, supply is important because you want to produce clean energy, and that's super important. But you realize that 50% of the path to decarbonization, for instance, will come from the demand by saving more energy, by electrifying the usage, electrifying car, electrifying heat pump in your home, electrifying industry process. So when you move to electrification plus digital, then you manage a better level of energy on the demand side.
But at the same time, you're hearing all these companies investing a lot of money, billions and billions of dollars. OpenAI talking about a funding round of $100 billion alone this time around, to build things like data centers which consume even more energy. With countries like India coming on board, demand is likely to surge. How do you manage that?
Look, it's always a very, very fair question, but we have been stuck for the past 10, 20, 30 years. We've been trying to do a lot in the energy sector, but the reality, we have not been able to manage efficiently energy. You know, we talked a lot about new generation, distributed generation. We speak a lot about flexibility between the grid, the utilities, the consumer. The consumer wants to produce more. All of that can work if it is completely integrated and you manage in an intelligent manner. Take your home, for instance. We cannot ask you to manage efficiently energy in your home. You're not in your home when I'm speaking to you right now. Let's imagine that in your home you have an electrical panel where I can extract data. I can put a level of intelligence, what we call at Schneider Energy Intelligence, and help you to save, without you knowing it, 10, 20, 30% of your energy. This is a solution. And that's why AI is a good news, because AI is bringing the technology we need on top of electrification, really to make energy more intelligent. That's why I'm a bit more optimistic than the average of the people on this topic.
Give us a sense of the kind of acceleration in demand.
Look, there is an acceleration, but
Give us a number. I mean, what kind of acceleration are we looking at in terms of, you know, the energy demand we're seeing from this AI boom?
It's very difficult to say, but the only number that everyone is talking about is in the world of data center, you will have another 200 gigawatts that will be installed by 2030. So that's a substantial demand. You have it in the US, you have in other geographies, but you have many geographies who are starting to manage energy efficiency. So it's very, very difficult. Now, if you look at energy in the world, electrification, what I can tell you, you will have another 10 tetra water of 10,000 terawatt of electrification to be produced between 24 and 2035, and 35 to 2050, another 10. So that's the only number that we have officially, really, to understand what will be the demand.
Of course, the focus is on how renewables can play a part. Is it conceivable at some point renewables could fully 100% power the AI boom? AI needs?
Look, you have a country like China, for instance, who are generating more than 50% today, more than half of what they produce, generate every year comes from renewable. So you have countries in the world that have shown the way. You have a country like France, who has been big on nuclear, who is producing a lot of renewable. Now, I don't think we are at a stage where we can say everything, but we are directionally, by 2050, you will have a large part that will come for renewable, more than half. Now, is it 50, 60, 70, 80, 90? It's far too difficult to say. Geopolitics, as you know, will play an important role in all of that, and that's very difficult to predict.
But if you would hazard a guess in terms of the ratio of how renewables could eventually power AI, would that be what, 50-50? What are we eventually looking at?
Today, because those ratios have been changing, so I will not take the risk. But again, supply is important, renewable is important, but the problem is not too much is it a cleaner energy or not. The problem is again in how you make energy more intelligent, how you help people to better manage energy in a more intelligent manner.
Where are we with that? Making the usage more intelligent, and how exactly are you using AI for that?
We are at a turning point. As I was telling you before, we have been in this phase where everything has been electrified more and more in the world. You had a layer of digital, but digital was not efficient. So I think now we are starting to have a lot of business case, user case. For instance, at Schneider Electric, we are able to design and simulate how a data center will work with the new chips of NVIDIA in 2 years from now. By doing that with NVIDIA, when Microsoft, AWS, whoever is building new data center, you are able to save a lot of energy. So you have that exists already. When NVIDIA is talking about the Omniverse, this is where we simulate how electricity will work in data center tomorrow. When you build those data centers, you make them more efficient, but more important, when you operate and maintain those data centers, you extract a lot of data that help you to save a lot of energy when you are managing. So you have already a user case. Now, if you were asking me, where are we technologically? I think we've done 20% of the job. So I think the next 2 years will be critical, and for us, it's a key milestone, definitely, in our history.
Olivier, a lot of emerging markets countries are now trying to make inroads into AI. Take India, for example. Yep. How do you think India should be looking at its energy needs to power its AI ambition?
It's interesting because I've been living 6 years in this country. I landed in India in 2007. The biggest problem of this country was access to reliable power. Now, you are in 26, almost 20 years later. The biggest problem of the world is access to reliable and clean power. So there is no change. This country has unique capabilities, because the ecosystem in which you are is putting a lot of pressure on systems because of temperature, because of all the infrastructure and so on and so forth. The capability you have in the country, the level of engineers that we have in the country, the demand of the economy, which is boosted, of course, by the Prime Minister agenda, makes India unique for us. It's a place where it's not anymore a place where you come, with products you have developed everywhere in the world. It's a place where you innovate, because digital is big in this country. It was the case before AI. It's even more with AI. So for us, it's a very, very strategic country where we see that AI will move very, very fast, and where innovation will take place that will impact many, many other countries in the world.
What is moving very fast, and where should investments in energy be?
The country itself has been always big on IT, on data. I don't know how much you know about what happened in the country, the way you manage the identity of the people. It's a country where has been completely digitized. So the need for digital was there before. Everything is amplified by AI, and all of that is pushed by the Prime Minister, which will create a lot of demand. You said it, on data center, on those kind of things, but on technology, on how to make it happen in an efficient way, at a lower cost. So the type of innovation that you have here in this country with startup, with the entire ecosystem, for us is very critical. India is one of the largest R&D centers in the world. That's the largest in number of people, actually already today, the largest number of software engineers. So India for us will be a place of innovation in AI where we will leverage a lot of solutions for the rest of the world.
And linked to that, what are your expansion plans for the Indian market? Are you looking at more headcount? What's the expansion plan? What's the growth plan?
40,000 employees in the world, the largest already of Schneider worldwide, largest R&D SLE. This week, for instance, we are launching a new R&D capability, a core competency and factory in liquid cooling. Liquid cooling is extremely essential for the build of data center. We acquired a company 2 years ago, for instance, in the US, which was called Motivair. The place where we are building the second largest R&D center and manufacturing is in India, here in Bangalore. That's one example on why we consider India very, very critical.
And in terms of the contribution of the AI business to you, how will that factor in into your own growth strategy? How important is that part of the pie?
We had our capital market day in December with all our investor analysts. We confirmed that by 2030, which is a longer horizon, we see a growth opportunity for Schneider between 7 to 10%. And we announced that 70% of the turnover of Schneider Electric will be related to digital activity. So that tells you how big is the opportunity for a company like Schneider, not only building infrastructure, but creating solutions which are more digital for our customers.
For a French company, a European company for that matter, how are you looking at the tensions between the US and Europe for the most part? How is that impacting the way you view your business and how you strategize?
With my predecessor, Jean-Pascal Tricoire, who is now the chairman of the company, 10 years ago, we've decided to manage very differently Schneider. So we have created an operating model which is based on 4 regions, on 4 hubs, which are Europe, historically, you can imagine, North America, China, and international. And international, as I said, everything starts from India. So we are moving to the next level of regionalization of Schneider. To your point, because of this multipolar world, we believe that you need to create very strong center from customer, sales, R&D to manufacturing, and that's how we are piloting Schneider within a very strong strategic framework, but I think 4 regions who can really develop the business and that can move faster, depending, of course, on every single ecosystem and geopolitical environment.
But lots of uncertainties and geopolitics among them. I mean, what's the biggest risk for you?
Well, look, the biggest risk for a company like Schneider is to be slow and not to be able to react fast enough in this kind of environment. We've been through the tariff last year, for instance, in US. For a company like Schneider, everything is happening in the US. We identify the risk, we communicate to the rest of our supply chain, and we adapt permanently. So for us, we see more the multipolar world as an opportunity for Schneider Electric to be a very different company, having a very different operating model, which is much more regional. And look, for the past 10 years, this has worked for us, so we will not change.
And of course, we have the French president here, Emmanuel Macron, making his trip to Delhi from Mumbai. I'm just wondering, how will you assess what's the significance of his trip here, and what do you hope he will achieve?
Well, look, the relationship, between France and India has been already a great relationship. I was telling you before, I was appointing managing director of Schneider Electric in 2008. We are a very, very small company, but we have been really welcomed by the environment, by the country, by the ecosystem, and all those visits are helping really to build a stronger relationship. Of course, with a deal that has been made between the EU and India, it's helping all that, and I think it just reinforced the relationship. Now, for a company like Schneider, as I told you, it's already the 3rd largest country of Schneider Electric worldwide. I would say we have already, great capacity by ourselves, but it's always helped to reinforce those relationships between the 2 governments.
Olivier, thanks so much for your time today. Olivier Blum, CEO of Schneider Electric. Well, more from India's AI Impact Summit ahead. ServiceNow COO Amit Zavery will be joining us to discuss how enterprise software can avoid falling victim to the AI scare trade. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside, coming to you live from New Delhi. Now, the IMF says China's economic policies are creating waste at home and damage globally. It's calling for Beijing to counter this with a shift to consumption-led growth. For more on this, let's bring in politics editor Laura Davison in Hong Kong. Laura, put this in perspective for us.
Yeah, this report really chides China, saying, look, that the economic policies you have been pursuing for decades, really, of pouring a lot of money into domestic infrastructure is really causing a lot of waste. And they've said that the Chinese economy essentially needs to reorient itself and make it much more consumer driven. The data shows that the Chinese economy lags way behind all other countries, but also especially high-income countries in terms of the percentage of GDP that's from consumer consumption. It's about 40% compared to 60 to 80% is what you see in other countries. So there's a lot of room there. The report acknowledges that this is not something that's likely to be able to happen in just a couple years, but is really suggesting that China needs to get a move on because this is essentially turning a big tanker in the middle of the ocean.
So it is about an economic policy transformation. I'm just wondering what's been the response from China and, what can it do in the meantime?
Yeah, China took issue with several different recommendations that were made in this report, but it's noteworthy that just last year, the Chinese government came out and said that consumer-driven growth is one of the things that they're focusing on and is part of their longer-term strategy here. So there's wide recognition that this is something that has to change. Particularly, there's been sort of overbuilding of trains, railways, and housing within the economy or within their domestic economy, and they realize that they need to put money elsewhere to continue to grow their GDP.
Laura, thank you so much for that. Bloomberg's politics editor Laura Davison joining us from Hong Kong. Now, let's talk about software. Call it software Mageddon or Sespocalypse, but software company stocks have been reeling. JP Morgan analysts say sector firms have shed around $2 trillion in value over the last 12 months, and investors became even more spooked over the last few weeks following Anthropic's rollout of new agentic AI tools. These tools automate legal, research, analytics, CRM tasks, and coding. The fear is they may commoditize the core function sold by enterprise software and software as a service giants. And that brings us to ServiceNow, where top executives are canceling scheduled stock sales in a bid to shore up investor confidence after the shares dropped close to 20% over the last 3 weeks. According to a regulatory filing, CEO Bill McDermott will also personally buy $3 million in company stock, which has lost nearly half of its value in a year. And we have with us one of the top executives from ServiceNow, Amit Zavery, is the company's president and chief operating officer. Amit, good to have you with us.
Hi, thanks for having me.
So the debate is still going on whether or not, AI will decimate software companies. It won't, will it?
Definitely not. I think there's a lot of opportunity to use AI in software, no doubt. We've been building a platform with AI for a few years, and if you look at our revenue growth in that area, has been very significant. We are going to be crossing $1 billion on AI-related revenue this year. We've been sharing that, and it's ahead of our plans. Last year, we crossed $600 million on AI-based revenue for our platform. So AI, I think, is a lot of synergy between what software reads, and there's a new transformation happening with AI today. And what we're seeing for enterprises, the key thing for them is to get a full solution, not just part of technology. And when you build a platform which includes AI and allow customers to move to the next generation technology without disruption, that's where the value gets unlocked. That's what we've been doing, and if you look at all our business metrics, 2025 was an amazing year for us. We beat every metric out there and the consensus every time. This year we raised our guidance and ahead of the consensus as well. Free cash flow margin is the highest number ever for us. We have rule of 50 plus, 55 really, so 35% free cash flow margin and 20% plus revenue growth. So we continue to see acceleration because we've been adopting AI in our platform for a few years already. So I think there will be differences between different software companies. I think right now the investors look at it as one big amalgam of companies and they can't seem to be able to distinguish. But over time, you'll realize that differences between platform companies who incorporate AI and really transforming their customers versus companies who are catching up. And that will be the difference, and you have to start looking into the next level detail to understand the differences there.
As you said, it is a broad brush. Investors are pretty concerned right now, and that is showing in your stock. We're talking about how it's lost about 50% in the last 12 months. I'm just wondering, what's messaging to your investors? How do you reassure them that you're okay?
Yeah, I think the multiple things. One, it's about innovation. We continue to innovate. We see the differences in customer adoption for our side. So our products have been well adopted by our customers, with thousands of customers using our product, and the growth has been amazing. Second, if you look at a lot of the work we're doing from incorporating AI into a platform, the way we help customers transform their ability to run their business, the whole agentic processes we create. So it's easy for customers to go from the traditional way of running the business and provide them some support for moving into the AI transformation, but being very deterministic, making sure that you get the right outcome. So that has been a great value add for our customers as well. Second, if you look at the growth in terms of our usage, the usage for our AI-based product, in terms of, we've said 55x went up in terms of the consumption last in Q3 because of people are starting to unlock the AI value into the products we deliver to them. So broadly, if you look at all the different metrics from the way we look at in terms of RPO, CRPO, revenue growth, the free cash flow, all of the things, investors should be looking at the numbers and they'll see.
So ServiceNow is in a good spot, has been embracing AI, and you have said earlier that AI will not decimate the software industry, but it will change, it will reform, it will.
Oh, for sure.
I mean, how might that look like? Will offerings be different? Could there be consolidation?
For sure. I think a few things will happen, right? So with any transformation with technology, so if you look at what happened in cloud, there were changes which companies had to adopt to when they were operating and providing software. So there were changes in terms of how you build the product, how you deliver it, and how you support your customer. Same thing is happening with AI. AI is a very synergetic thing, right? So if you're using workflows, you want to use AI to be able to automate a lot of the processes, but then you need to put a lot of scaffolding around it, around security, compliance, auditing, trust, safety. So enterprises can't just go all in without understanding what it means to the data, what it means for the processes, and how do you run this thing in a much more controlled fashion. So we have a product called AI Control Tower, which gives you visibility into what's happening with AI inside your company across the whole estate. And that is a difference maker, because then the customers start feeling comfortable, especially in the enterprise side, because there's so much risk associated with it. So that has been the big change already happening, and that's what we're seeing now from the adoption perspective, because the security pieces have been taken care of in the products like ours. We provide them the full ability to have visibility and auditing and compliance. So you can't just take AI and say, I'll run this thing and I have no idea what it did for you. You have to be able to provide them full support around it. So solutioning is a big difference versus providing a spare parts. So a lot of the technology out there, people are saying, I can take some of these large language models and run it myself, but it doesn't give you the full package around what you want to do as a business. So then you land up running into a lot of security concerns, compliance concerns, and then there's no upgradability. How do you maintain backward compatibility? How do you make it work across multiple different domains? Make it work in like sovereign cloud, for example, which might be localized. A lot of these models don't run in localized environments. So how do you provide that full support around it to make customers successful?
How might the industry look like in 3 to 5 years? I asked earlier whether there could be consolidation as a result of it.
I do think so. There will be some companies who will not be able to make the transformation to AI. So there will be some software companies who will have difficulty in terms of getting to the next. It just happened during cloud time and happened during web. It always happens. If you're not taking on the latest technology and driving that adoption to your customers, you will be left behind. So there will be differences between different providers. So there could be consolidation, as you point out. There could be some companies who will go out of business. But there will be companies who will take advantage of this transformation and really accelerate. The tailwind with AI can be a huge benefit for all the software companies. And no enterprises are just going to go and do spare part kind of things. They want solutions. So if you complete the story and provide them value, customers don't care who the provider is as long as you're doing the right thing for them. And that's how we really drive our business. And we will always customer first mindset with the whole security, compliance, visibility, and end-to-end, not just doing pieces of a technology there.
Talk to us about your tech spending. I mean, given the trends and how AI is progressing so rapidly, where are you investing in?
So we're investing for multiple things. One, we've always been a platform company. So the AI is part of our platform. The other areas we have growth. We have been one of the biggest vendors for the IT-related services. Now you see what we're getting into is HR, employee engagement. How you help employees solve any of the problems they have when you're working inside the company. How do you get them help around the HR-related issues, IT-related issues, finance, supply chain, procurement, and then expansion into CRM, especially customer service, because AI helps you understand the intent of the user and support their whole ability to resolve issues. And then we have recently expanded a lot in our security space. Security business is $1 billion plus, growing at a very, very high rate. And we recently also are acquiring a couple of companies in that space to really shore up the ability to really accelerate what you can do with AI, with security, because AI without security is chaos. And what we're trying to make sure that you can control AI versus AI controlling you. So security is becoming the big part of the unlock. And so we are adding a lot of capabilities around identity management and governance, around operational technology, cybersecurity, around that, device management. There's a physical AI coming in, right? You look at the humanoids and things like that in manufacturing plants. We're bringing AI to that to make sure there's no breaches. So if there are any security breaches, how do you manage the breach through the whole life cycle and support the CISOs?
As you embrace AI, are you hiring fewer people?
No, our growth has been pretty, we've been adding employees. Of course, there's
What's the plan for headcount in the next 12 months?
I think we are being on a consistent growth path. I don't think we have a number specifically. It's all about what we are on 28,000 employees, and we've grown over a couple of thousand over the last year. But the way to think about this is that we are seeing some efficiency gains in our engineering part of it or support part of it using AI. So we use a lot of AI tools. But what has happened is allowed our employees to now go and do some other things. So for example, if you look at customer service, our attrition was higher because people don't enjoy talking on the phone and everything else. Now with AI, we've been able to reduce the amount of time they have to go and deal with every simple issue, where AI can take care of a lot of that and deflect it for them. And now we're freeing up them to do a lot of knowledge articles, solve a lot of bigger problems. So the work has changed somewhat. So employees, we continue to hire in areas of R&D. We do a lot of go-to-market growth as well. What we're doing from the perspective of how we support our customers to adopt a product faster, how do you simplify the user experience. Those are things we continue to invest in. And our expansion in TAM, right? We are 600 billion TAM now because we got into new segments, which we couldn't do before. With the ability to accelerate our software development, we're getting into a lot of new segments as well.
Amit, good to have you on Insight. Thank you so much
Thanks
for your
for
time.
having me.
ServiceNow President and COO Amit Zavery. Now, in other news, Japan's 20-year government bond auction drew weaker demand than its 12-month average. The bid-to-cover ratio was 3.08 compared with 3.19 at the last auction and a 12-month average of 3.29. Now, this was the first test of investor appetite of super long bonds after Prime Minister Takaichi's landslide victory triggered a surge in buying. And still ahead on Insight, AI reshaping economies, transforming work, and now driving one of Microsoft's most important partnerships. Company President Brett Smith will tell us why. Keep it here with us. This is Bloomberg. Welcome back to Insight, coming to you live from New Delhi. Microsoft President Brett Smith says the company's partnership with OpenAI remains crucial, even as they expand work with other AI developers. Smith told us the company is on track to spend $50 billion to bring expanded AI infrastructure to the global south.
I do think we need to act with urgency. Today, about a quarter of the population in the global north has access to and is using generative AI, but only 14% in the global south. And when you look at the rates of growth, it's almost double in the global north what we're seeing in the south. So just as electricity divided the world, the countries that had access to it for a century industrialized, they grew their economies. The countries that lacked access to electricity fell behind. We will turn this moment, I believe, either into a moment where we will close this divide. We can use AI to really enable the global south to catch up in terms of economic growth, or we will continue and maybe risk even exacerbating the great economic divide that defines our world today.
But what's most at risk for the global south? Is it jobs? Is it jobs getting eliminated, reshaped? What exactly is the biggest concern?
I think fundamentally it's economic development. It's prosperity. Because when you have a general purpose technology, meaning something like electricity that reshapes the entire economy, what history tells us is that the countries that deploy it, adopt it widely, grow faster than those that do not. So it's about productivity growth. It is about job growth. It's about opportunities for a new and younger population. It's about opportunities to solve real world local problems using the best technology available.
Microsoft committing $50 billion by the end of 2030. What would be the priority for that kind of investment and funding?
Well, we at Microsoft made clear we're on pace to spend $50 billion by 2030 to bring AI to the global south. If you think about what happened with electricity, private capital did not come to these countries. They didn't bring power plants to these countries. This starts, I think, actually with investment and capability. So when you see a company like Microsoft investing, and we're obviously not alone, that's encouraging, especially since the investment is all about world-leading technology. But it's just a start. I think it's going to require a massive amount of funding. It is really going to require getting the private markets moving. It's going to require governments using AI because they play key roles in generating demand, and we need to skill the population. That requires schools, it requires government, it requires tech companies all working together. That's another big part of what we at Microsoft are announcing here this week.
All this happening at a time when a lot of people are getting skeptical when it comes to AI. We talk about how AI will take away their jobs. We talk about how AI is a technology that's actually enriching the tech titans. How do you reframe? How should we frame the AI story?
Well, fundamentally, I think we should recognize a few things. These kinds of technology waves typically take years and decades, not weeks or months. I think we should recognize that none of this is fundamentally ever about what technology does to people. It's about people making decisions about how to use technology. People who run businesses, people who run governments, people who run nonprofits. We have an opportunity, I believe, to use AI to make jobs better for people. There will be some processes that are automated. There will be some jobs that are displaced. But new jobs will be created, but mostly I think many jobs will change. And the key is to give people access to AI tools, give them the skills that they need to use them, give people the opportunity to innovate in how they work. I think when you do that, you create a much better foundation for the future.
Given what you have just expressed, I'm just wondering how that's shaping the way you hire in the countries that you do business in, like India.
I had a fascinating conversation earlier this week in another country. Somebody who works in a company was describing the contest they had so that employees could use AI and create more use cases, to create uses of AI that advance productivity or build better products. But the most interesting thing this person said to me was it wasn't fundamentally about creating a better product. It was about finding the people who wanted to lean in, who wanted to innovate, who had creativity and ambition. I think there's something that's important and even inspiring for all of us in that. Give people access to the tools, to AI, see what they can do. If you find an employee who wants to innovate, that says that that's an innovative person. That's the kind of person you want to bet the future of your company on by investing in their development.
So in an AI future world, will you be hiring more or fewer people?
I think I might be hiring the same number of people. I think they might be doing different things than in the past. I do think that entry-level work inevitably is changing. Instead of coming in and just doing one thing, and it may be more the basic research or checking of citations or sources, I think entry-level work may become a little bit more like apprenticeships. It may become something where you want people to be exposed to multiple different tasks and skills for the first year or two. I think this is a great time for employers that are far-sighted. What do you really care about the most if you're a great employer when you're hiring someone new? Is it somebody who's going to do something that needs to get done for the next 6 months but may not be all that demanding? Or are you hiring people who are going to become the employees that will lead your firm into the future? The people who 3 and 5 and 10 years from now are likely to be sparking the innovation you need. That, I think, is and often should be at the heart of what great employers are looking for. Right now, we all know it's a tough job market for people graduating from universities. But flip that on its head. It's a great time for employers who are far-sighted, who care about talent, who want to invest in people, who are going to build the workforce, not just for the next year, but for the next decade and beyond. I think that's what we want to be at Microsoft. I think that's what everybody who really has a long-term vision should aspire to do. And we need to make AI and AI tools and AI skills a fundamental ingredient for everybody that we hire in that way.
Brad, I want to take a look at your Microsoft's partnership with OpenAI. How do you see that evolving longer term?
Well, I think it remains a critically important partnership for Microsoft. We bet on each other, but it's not as exclusive as it was, say, a few years ago. OpenAI uses our compute, they train models in our data centers, but they work with other companies as well. We critically rely on OpenAI's frontier models. They are among the best. On many days, they are the best in the world. But we have a relationship with Anthropic. We use open source models. We're developing our own models. So on both sides, we work with more partners. But I think the partnership between the two of us remains an imperative. It's a huge priority for us at Microsoft.
The question is why? Is it a hedge? Is it a strategic pivot? How would you describe that move looking at alternative partners?
Well, look, if you want to think about the partnership between OpenAI and Microsoft, all you have to do is ask one question. Would any of this generative AI sector even exist if the two of us had not come together? OpenAI created something that no one else even understood was possible when they launched ChatGPT. And OpenAI could never have created that without Microsoft's compute and really frontier data centers on which to train that. We built something special. We'll each do special things on our own. We'll each do special things with other companies. We'll each do, I think, very special things with each other.
Just one final question, because we're running out of time, apparently. Copilot, is it losing traction?
I don't think so. It's gaining ground. It's getting better every week. It's getting better every month. I say this as a user, not just of M365 Copilot, but our consumer Copilot, our researcher agent, our other agents. We're seeing usage grow. We will continue to add features and functionality. I personally think it is an important part, not just of Microsoft's past and present. It is a key part of our future. It is a key part of, I think, making everyone more creative, more productive. I certainly find that in my own work each and every day.
Of course, Brad Smith would use Copilot. Now, still ahead, an exclusive conversation with Fractal Analytics co-founder and chief executive after they became the pure-play AI firm to list in India. Plus, a post-earnings chat with the CEO of Australian retail industrial conglomerate Wesfarmers. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from New Delhi. Let's take a look at how markets are faring with Bloomberg China show co-anchor David Inglis in Hong Kong. And Dave, it is about tech, the story that keeps on giving.
It really is, and in fact it's giving in quite a very obvious way right now when you look at the benchmarks and the specific markets where you do have these big tech representations, right? So I was actually going to say, we woke up this morning to a rather hawkish tilt coming out of the Fed minutes, and that really didn't matter as far as risk assets go, because once markets opened up, like Korea, which I'll get to in a moment, it really is still that story. And I think within the Korean markets, it's really the memory story. So as far as Asia goes, we're better by about 0.5%. There's an outperformance coming through as far as the Aussie dollar is concerned. We talked about, of course, what's been taking place within the Korean market specifically, right? So we're up 3%. On that specific benchmark. Singapore and Australia, both those markets are also getting their respective tailwinds coming through when you think of earnings season in Australia. And I think when you also look at that market, both Oz and Singapore are actually flirting with all-time highs as far as that's concerned. Korea, of course, has been there for a while. Right. Now, what was the catalyst in Korea today? So we know about the memory shortage in the world. We know about the two companies at the very center of that. Local reports suggesting that Samsung is in negotiations to hike prices of HBM4 in the order of about 20-30%, which effectively the market's expecting, but now we have a number to work on, and as far as what that number could look like out of Samsung. Market's really running with that. SoftBank is down to the OpenAI story in the Bloomberg scoop earlier on, talking about how this latest funding round is set to top $100 billion. SoftBank in the Nikkei session's up about 3%. In Rio Tinto, we mentioned the earnings story that should be out with earnings in very shortly. Very quickly, let's have a look at, speaking of software and IT stocks, right? India just coming online, of course, and TCS. And speaking of OpenAI, TCS and OpenAI did come out and talk about this new partnership. That stock is up about 1%, along with a broader cohort, of course, of software names over in India. Before I go, just to mention that we're not full roster in the Asia Pacific today, so we're lighter on volumes overall. A couple of markets are still shut. No Taiwan, no mainland China, no Hong Kong, and still no Vietnam as well. Just to wrap up this update of these markets this Thursday. Back to you, Hash.
No China, no Hong Kong, but you're still there. David Inglis, thank you. Bloomberg China Share anchor David Inglis in Hong Kong for us. Now, Australian conglomerate Wesfarmers is warning that cost of living pressures are impacting many households as it announced a 9.3% increase in first half net income. Paul Allen joins us now with more. Paul, it was a solid set of numbers for Wesfarmers, but how is consumer sentiment in Australia heading into the second half?
Yeah, that's a very good question, Has, and as part of the reason that we're seeing Wesfarmers stock a little bit softer today. It's off by about 4.5%, although off session lows. Wesfarmers is a very diversified conglomerate, but its retail arm is huge, and it includes such iconic names in Australia as Bunnings, Kmart, also Officeworks, and these are seen as real canaries in the coal mine when it comes to consumer sentiment. In terms of the revenue they delivered, all in line with estimates, and the top line number was pretty good as well from Wesfarmers, $1.3 billion net profit, interim dividend of $1.02 per share. But there were some remarks about the cost of living pressures being felt unevenly in Australia, many households being impacted, and of course we've had Reserve Bank of Australia rate hike back in February. Inflation's proving pretty sticky as well. But Wesfarmers is more than just retail, of course. Chemicals, fertiliser, energy business, that contracted a little, about 3.2% on year, but the revenue from the health business was a narrow beat. Let's unpack these numbers a little bit more because we're joined now by Rob Scott, Managing Director and CEO at Wesfarmers. Rob, thanks so much for joining us today. And as I was outlining there, such a large chunk of your business does come from that retail arm, and inflation continues to be an issue. Do you see cost pressures starting to stabilise going forward?
Well, Paul, not necessarily. I think inflation, well, it has been quite persistent, and there are a number of capacity constraints facing the Australian economy. So we are starting to see that customers are being more value conscious. Whilst this is a challenge economically in Australia, and it's a challenge for households, our businesses are really well positioned to help households make ends meet. We keep our prices very low. We have an everyday low price policy across businesses like Bunnings and Kmart. So historically, we've actually performed quite well in these environments by virtue of really staying focused on what customers are looking for, which is low prices. And our strong focus on productivity across the group enables us to deliver low prices and continue to grow profits. So although the environment is tough, we feel that our businesses are very well positioned to compete in this environment.
Yeah, I'm wondering if you're noticing a behaviour in consumer sentiment across your retail portfolio, and are consumers changing their approach to discretionary versus essential spending? What's your data telling you?
Well, the data has shown that certainly after the last interest rate increase, so as you know, inflation has proven to be quite persistent. We currently have inflation tracking at almost double the level of economic growth in Australia. And as a result of recent interest rate increases, we are seeing customers be more value conscious. So we've seen that play out, that more customers, on the positive side for our businesses, more customers are shopping in our brands as they look for value. But I guess lower income households have less money to spend, so are putting fewer items in their basket. So there are some challenges there, and that is why just in recent weeks, we were anticipating these financial challenges for the economy. So we have dropped the prices of thousands of items across Kmart, Bunnings and Officeworks. And these were scheduled price decreases really to help customers at a time when value is really important.
Well, you've previously made remarks about the role of interest rates and how it impacts on consumer sentiment as well. I mean, do you see a case for monetary easing, or is this more a story of structural cost pressures that are much harder to address than that?
Well, Paul, I think there are a number of factors that are contributing towards inflation. And whilst monetary policy is one mechanism to address that, we shouldn't underestimate the challenge that we have in Australia with capacity constraints in areas such as housing and energy. So we have a shortage of housing. We're seeing housing prices go up. Certainly what we are focused on within our Bunnings business is trying to bring greater affordable solutions to homeowners as they think about expanding and renovating and building their homes. So Housing affordability is a challenge. Energy prices have been going up. So I would say that both addressing capacity constraints, also really supporting a stronger productivity agenda across the economy, those will be very important points if we are to start to get inflation under control.
Well, you're also one of Australia's largest employers as well, and in a tight labour market, what are you facing in terms of hiring? And are you experiencing any wage pressures? Are employees demanding more?
Well, one of the benefits that we have in Australia is we have relatively low unemployment, which is a good thing. We are seeing some shortages of key skills in some areas. Look, overall, we have benefited across our businesses because we are seen as an employer of choice. We do pay well. We also provide additional benefits and incentives, and we share the benefit of our financial performance with our teams through shares and other incentive programs and benefits. So overall in Wesfarmers, we feel pretty good about the engagement of our team and our capacity to attract talent. Where it becomes more of a challenge is as a nation, as we're considering developing new assets, developing new projects, really leaning into the opportunity that will be afforded through new technologies and generative AI and so forth. These are areas where we do have some shortages in skilled labour as a country. So there are some challenges, but overall in Wesfarmers, I feel that we're pretty well equipped to face into the opportunities and challenges.
Yeah, can you tell us a little bit more about those technological developments? How Wesfarmers is positioning itself during this digital transformation, use of AI tools, and can you see a way that AI could improve the customer experience?
Oh, absolutely. And Wesfarmers has already been on a multi-year journey to digitise a lot of business processes. We've invested heavily in building out our data capabilities and digital platforms, and our team members are already very engaged in the digitisation of businesses to really work smarter, not just harder. And now the opportunities afforded through generative and agentic AI, I think, are going to be very powerful for businesses like ours. We've just recently entered into some strategic partnership agreements with Google and Microsoft, which will bring some of the best of the developing technologies in this space to our businesses. And we see great opportunities to really empower our team with digital tools to enable them to work smarter. Also opportunities in the agentic commerce space so that customers that want to engage with our brands through large language models will be able to do so in a really seamless way. So lots of opportunities. We're very excited about it, and we see it as a way of delivering even greater value to our customers whilst accelerating the growth of Wesfarmers.
Well, of course, Wesfarmers isn't just about retail. You're a very diversified conglomerate as well. And I'm wondering if you can tell us a little bit about your lithium business, because the recent lithium downturns lasted a long time. How is Wesfarmers CEF ensuring it can weather similar cycles?
Well, when we first invested in lithium, we did so with a very long-term view. We invested a number of years ago. We've undertaken a greenfield development of an integrated mine, concentrator and refinery. And we're actually really pleased how that's progressing. So it was a major milestone to get our mine and concentrator we're almost up to nameplate capacity, and we delivered our first profit for the first half. And we're confident of increasing that profit for the full year. So a lot of things are going well there. We are taking a long-term view. We still have some work to do to get our refinery operating. We've had a lot of positive progress, but to commission a refinery is quite a complex process. So we're generally pleased with the direction of travel. And I should also note that our chemicals, energy and fertiliser business continues to expand the productive capacity of key components such as our ammonium nitrate business and sodium cyanide, which are critical ingredients to growing and important markets for Australia, such as iron ore production and gold.
All right, Rob, thank you so much for your time today. That's Wesfarmers CEO Rob Scott there. Haslinda.
Well, Alan, thank you so much for that. Now, we want to bring you live to New Delhi and the pictures of New Delhi as the India AI Impact Summit gets underway. Speaking now is N. Chandrasekaran, the chairman of Tata Group, that also owns IT giant TCS and other firms such as Tata Technology, Tata Motors as well. And earlier, of course, we heard from the IT Minister Vishnu saying how he's expecting large data center investments in the coming months. India, of course, expecting $200 billion, in fact, in the next 2 years in terms of AI investment. And we've had other commitments from the likes of Adani, $100 billion within the next 10 years. Of course, India has big, bold ambitions about being a giant AI play. Currently, it ranks third in terms of AI competitiveness, behind only the US and China. But years of underinvestment pretty much playing out in India. It is an overhang when it comes to its AI ambition. Of course, we have 150,000 people participating in the AI summit here in New Delhi. The big boys of tech are here as well. Sam Altman among them. We have Bill Gates in attendance as well, not to mention global leaders, the likes of Macron. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from New Delhi. Now, Google DeepMind CEO Demis Hassabis says India has huge potential in AI thanks to the wealth of talent building up in the country. He spoke to us alongside Alphabet Senior VP James Manyika at the AI Summit in New Delhi.
I've worked on AI my whole career, my whole life, because I believe it could be the ultimate tool to accelerate scientific discovery and medicine, and also help with some of the other grand challenges facing society today, like climate change and energy. All of these things I think AI can help and be applied to. On the more individual scale, and maybe also for India specifically, I think that this incredible technology, powerful technology, is sort of available to almost everyone around the world, maybe only with a lag time of a couple of months behind the absolute frontier. So what I imagine if I was a young person today thinking about working in technology, maybe building a business, is I think there's incredible untapped potential here. And using these technologies, you can almost sort of become superpowered. You can kind of do 10x of what I think an individual engineer could have done in the past. And so I think there's incredible new business opportunities and new types of jobs that will be even more high earning and more valuable and more fulfilling than perhaps some of the jobs that will be disrupted by AI.
How do we position for that?
No, I would also just add a few more things. I think part of the potential for average benefit is enormous, but I think there's some work we all have to do. So, for example, if I think about questions of access, that's so important. How do we make sure everybody actually has access to the technology to be able to use it, capitalize it? Other questions of access, which are particularly important in countries like India, are access through different languages. For example, I mean, India has many, many different languages. And I think focusing, for example, on making sure that people can actually access the technology in their language, in their culture. And that's one of the reasons we're spending so much time on in the Indic languages. I mean, we have a project right now with Project Vani, where we're trying to work across something like over 700 districts and all the dialects that are used in those districts to see, can we build in more Indic languages? So if you think about that question of access and linguistic access, that's one of the ways you democratize the possibility of people being able to take advantage of this technology. I think when it comes to the question of jobs, I think it's important to realize that several things will happen, as have always happened with technological advances over time, which there may be some jobs that will decline, but many more jobs will grow and be created. And in fact, many more jobs will change. So how do we make sure we're investing in the skills and the capacity for people to take advantage of this technology and lean into the jobs that are going to grow?
Despite the benefits that you've talked about, there are also risks. We're still unsure what the real risks are and what the real benefits are yet. We seem to be in a rush, when it comes to this AI build out. I mean, we have the likes of, Alphabet, Amazon spending in excess of $200 billion in a year alone. Do we really need to be in a rush in this build out?
I think we should be.
in the following sense. I mean, we've set out to be bold and responsible, and the bold part of what we try to do is to make sure, how can we make sure we go hard at the possibilities and the benefits for people and society? And when we think about those benefits, they include how much this technology empowers people, how much it enables economic growth and productivity, how much it advances science. Think about all the extraordinary work that Demis and the Google DeepMind team have done, and also how much it allows us to solve societal scale challenges that are here today. So I think all of that is a reason to lean in and invest in the technology. At the same time, we should take the responsible part of this pretty seriously, and we do.
I think I'll just add to that. I describe myself sometimes as a cautious optimist. So, I'm very optimistic, and the benefits are going to far outweigh the risks in the future. And I also am a big believer in human ingenuity. There are lots of technical issues. Can we make sure the guardrails are the right guardrails around the systems to make sure the systems do what we want and do their own things? These are kind of complicated research questions, but I think we'll get it right given enough time. But I think that was the issue you brought up earlier, is this kind of crazy rush, kind of racing that's happening, which of course drives progress, but also I think we need to be sort of more thoughtful, those of us in the lead in the industry, and maybe cooperate around things like safety. And we would advocate bringing in the scientific method, trying to use that as the first principle for advancing the science and the frontier.
Probably the wrong people to be asking this question, but is there a risk that AI will go rogue? Is there a risk this AI experiment could go all wrong? Is that the risk that we should be embracing?
Yeah, look, there are some serious risks. Of course, we think that there's amazing benefits and opportunities, but there are proper risks that we should be legitimately worried about. There's two classes that I worry about. One is bad actors repurposing these technologies that were meant for good things in harmful ways, because it's a dual-purpose technology. So that's one thing. The second thing is the technical risks themselves inherent in the technology. Not today's systems, but maybe in a couple, 2-3 years' time, as the systems become more autonomous, more independent, they'll be more useful, more agent-like, but they'll also have more potential for risk and doing things that maybe we didn't intend when we designed them. So I think those two classes of risks need to be addressed very urgently in the future.
James?
No, I fully agree. I also think that some of the things that are often described as risks, another category, are ways in which this will change how we've set up things to work, whether it's, for example, the future of work, where there'll be some challenges, but also some benefits. How we think about the impact of AI on education, where it's complicated. There's some extraordinary benefits for how it's going to improve education and learning. You can learn anything in any language, personalize it and so forth. But we know at the same time there's some challenges around things like the potential risk of cognitive loss and so forth. So I think we have to be thinking about both, not only what could be lost, but what could also be gained as this technology gets applied in areas like health, education, and other areas.
We want to talk about the role of governments. Are governments and governance institutions ready for this super intelligent system? And what should we be looking out for? What should they be preparing for?
I think the role of governments and society generally should actually be to focus on two sides of the same question. On the one hand, of course, pay attention to the potential risks and challenges that we're going to encounter, such as the ones that Demis was talking about. So we should think about the risk part and the important rules and regulations and process we have to have for that. At the same time, we should also think about the other side of that, which is the ways in which governments can actually enable the possibilities, enable the innovation, enable the use of this technology in the public interest, enable some of the beneficial things. So I think the role of governments should be to look at both sides of that question and do as much as possible.
Yeah, I think just to answer your question as well, I feel like we probably don't have strong enough institutions to deal with what's coming. That's my feeling anyway. And I feel like another complexity of this technology is it's digital, so it means it's going to affect everyone in the world probably, and it's going to cross borders. So I think there has to be some element of international cooperation, or maybe at least minimum standards around how these technologies should be deployed. And that's why I think things like these summits are very important, to bring the international community together, starting with the UK and the Paris and the Seoul so on now here, and bring decision makers together with the technologists to actually debate through, how should we navigate this next phase as humanity, because it's going to affect everyone. And I think there are no easy answers, and I think dialogue and some cooperation across on international scale is what's going to be needed.
AGI. You've been pretty optimistic. You say it's coming in...
Well, maybe 4 to 8 years.
What trend lines make you that optimistic that it's coming in that time frame?
Well, look, we see incredible improvements all the time with just our own technology, with Gemini, each new version becoming more and more capable, doing incredible things that, frankly, some of us who've been working this for the last couple of decades, would be surprised ourselves, understanding concepts, understanding the physical world. I think we're on the cusp of things like robotics working. So there's a lot of things many of us have been working towards for many years now coming to fruition. And you're seeing AI really helping with things like science. I think AlphaFold, obviously our program, was a lighthouse moment for that, but I think it will be the beginning of many examples of that over the next decade. A kind of new era of, golden era of scientific discovery is what I'm hoping is going to happen. And we're seeing that no sort of let up in that progress. If anything, things are accelerating even faster.
Still ahead, we speak exclusively to Fractal Analytics about the stock's wild ride since this week's debut. This is Bloomberg. We're showing you live pictures of New Delhi as the India AI Impact Summit gets underway. Speaking now is Alphabet and Google CEO Sundar Pichai. Let's listen in.
Across more than 20 African languages. We need this bold thinking in more places to tackle more problems across health, education, economic opportunity, and more. Technology brings incredible benefits, but we must ensure everyone has access to them. We cannot allow the digital divide to become an AI divide. That means investing in compute infrastructure and connectivity. I mentioned our Vizag investment, and we have others in Thailand, Malaysia, and more. We're also building a vast network of subsea fiber optic cables, including 4 new systems between the US and India, as part of our America-India Connect initiative announced yesterday. Responsibility also means navigating profound economic shifts. AI will undeniably reshape the workforce, automating some roles, evolving others, and creating entirely new careers. 20 years ago, the concept of a professional YouTube creator didn't exist. Today, there are millions around the world. Training is crucial. We have trained 100 million people in digital skills, and our new Google AI Professional Certificate will help people master AI in their jobs, available globally. Finally, trust is the bedrock of adoption. We have created tools like SynthID used by journalists and citizen fact checkers globally to help verify the authenticity of the content you read and see. But no matter how bold we are or how responsible, we won't realize AI's full benefits unless we work together. Governments have a vital role that includes as regulators, setting important rules of the road and addressing key risks. And importantly, also as innovators, bringing AI to public services that improve lives and accelerating adoption of these technologies for people and businesses. There are glimmers of this from around the globe, from the Ugandan government using AI and satellite imagery to locate priority areas for electrification, to getting potholes fixed for residents more efficiently in Memphis, Tennessee, by using AI scans of road surfaces from buses.
Of course, we just heard from Sundar Pichai there speaking at the AI summit here in New Delhi. He talks about how AI will be used to solve the world's problems, including, the sciences as well as diseases, including the likes of cancer. Meanwhile, India's first AI company to IPO, Fractal Analytics, has been on a roller coaster ride since its listing on Monday, as enthusiasm for the technology collides with the broader sour sentiment on the market due to a major sell-off in software stocks. Fractal sells AI and data analytics software to large enterprises across financial services, retail, as well as healthcare. Joining us now, Srikanth Velamakanni, Group Chief Executive and Executive Vice Chairman at Fractal Analytics. Good to have you with us. First off, talk to us about that disappointing performance on your debut. What happened there, you think?
I think it's the markets are currently in a very risk-off mode. And there's a lot of fear in India, especially about AI and how AI will disrupt the traditional tech services companies. So India really needs companies that benefit from the AI progress, not just that will suffer from AI progress. And that's why Fractal listed at this time. And I think there's still time for markets to fully understand the Fractal story and then price the stock accordingly.
You talked about AI fears in India. I'm just wondering whether that could be a reversal of that, given this AI summit where, you know, the big names in tech and the big names in the world are in attendance.
AI has tremendous potential for India because given the scale of our population, given the talent that India has, and also the kind of data sets India has, and also the intent at the highest levels to get AI right in India, if you put all of these three things together, India should be a very credible player in the AI space. Today, India already publishes the third largest number of papers in the AI space. India and a third or maybe a quarter of the world's leading AI researchers are Indian, no matter where they may be living. And there are very credible AI research labs in India, like even the ones from Fractal and some others as well. So given all of that, I think we are in a very good position to not just build frontier AI, but also deploy it at national scale, and three, upskill the whole population to be AI native. I think if we do all three, I think we will be in a really good position as India.
Srikanth, I'm just wondering how fast India can turn from an AI consumer to an AI developer. I mean, we've seen years of underinvestment. Investment is finally coming in. Can this happen very quickly?
See, first thing is that India is already the second largest market for any AI company out there. I think OpenAI recently disclosed that they have more than 100 million weekly active users from India. It's true for all the other frontier labs also that India is either the top country or the the country with second most number of users. So clearly that's happening already. But secondly, what we are also seeing is that India has a 6 million developer community, and every developer is now using AI tools to build more AI and other tech. So it is just a matter of time that India will fully embrace AI. And three, what you're seeing is there are a number of deep tech startups, more than 3,000 deep tech startups in India. More than 90% of those startups are AI startups, solving amazing problems. They're thinking very big. So it's just a matter of time that these three things will come together and will create something magical in India too. And last thing I'll mention here is the India AI mission, which is also, there are 12 companies that India has identified which are part of the mission. They're building large models. Fractal, for example, is building a large reasoning model, which we think we can deploy for healthcare. And the biggest way in which India can really benefit from the AI race is if we build frontier or near frontier models and then deploy it at national scale, let's say for healthcare, then the virtuous cycle of that feedback coming from data and users will actually help India create frontier AI in healthcare and other spaces. So this is what our bet is, and we are seeing some traction on that front.
Srikanth, you talked about how many Indian companies are already using AI tools. What AI tools are being used by Fractal employees, and what is that doing for productivity?
See, Fractal uses a lot of our own tools. For example, we released Fathom, which is our 14 billion parameter reasoning model. We also released Fathom Deep Search, which is a 4 billion parameter model that actually beats deep search of other major frontier labs. We have a new model called Vaidya 2.0, which is actually number one today on Health Bench Hard. It's the globally number one model on Health Bench. So we have all these models that Fractal uses, but then we're also willing to use any other frontier model out there, whichever is doing really well. So whether it's Claude Opus 4.6 or this GPT 5.2 Codex or ChatGPT and other frontier models that are available for everyone to drive their productivity up. So we are seeing this play across a whole range of activities, whether it is about building AI, which we do where we use these tools, or it is in our SG&A functions where we are seeing impact of AI in accelerating productivity of sales or increasing the throughput of our hiring and increasing the quality of our hiring, all through AI tools which are doing the interviewing, which are doing the test, giving the test and so on.
Give us a sense of how much of the workflow is actually now automated, and where do you go from here?
It is, I would say that we're still in the early days of enterprise AI adoption. Whether it is Fractal or it is the Fortune 100 enterprises that Fractal serves, I have not met a single CEO or a chief AI officer or a chief technology officer of any major company who said that, look, I fully harness the power of AI inside my company. They're all saying we are scratching the surface. The biggest companies in the world tell us that they're just scratching the surface as far as AI is concerned. So we are at the very early phase of adoption. I expect that this is going to happen in the next 18 to 24 months, that every major enterprise is going to adopt AI in reimagining their business process with AI. We see a large potential there, and we see that as the tailwind for Fractal as well. As an AI company that powers decisions in the largest companies in the world, we see the power of AI to transform business processes, reimagining workforce as the most powerful driver of AI, of organizational performance. And we are seeing initial response to that. We expect massive adoption to happen in the next 18 to 24 months in big enterprises. Today, most of the adoption is happening in writing code, which is kind of the easy part. But using AI to reimagine business processes is a really hard problem. And that's where you're seeing major breakthroughs happening as we speak right now.
As companies reimagine the future and workflows, I mean, the IT services industry is one that hires about 6 million people. What might that mean for the industry as a whole 3-4 years down the road?
The one thing to realize is that for the same quantity of work that the current tech sector is providing, you don't need 6 million people anymore. You probably can do it with 3 or maybe 2 million people. So that means there's 4 million people who get freed up. But there is a paradox called the Jevons paradox, which says that as something becomes cheaper and easier, the demand for that quantity expands dramatically. No company has enough tech today. So therefore, the need for tech will dramatically increase. And the net result is that you will need not 6 million, maybe more people. So that's my hope, that as AI compresses traditional technology, the demand for tech will multiply so much more that net-net, India will only be hiring more people.
Srikanth, thank you. Srikanth Velamakanni, Group Chief Executive at Fractal Analytics. We're showing you now live pictures of New Delhi as the India AI Impact Summit gets underway. French President Emmanuel Macron is speaking currently. Let's listen in.
Culture, public services for the good of mankind. Both of us, we do believe in this revolution. 1 year ago, the landscape started to shift. The US announced Stargate, China launched DeepSeek. AI has become a major field of strategic competition, and big tech got even bigger. And a lot of them are in this room and still accelerated during the last year. AI, GPU, chip tensions are now directly translated in geopolitical and macroeconomic terms. Sometimes for the best, sometimes for the worst, I have to say. But clearly 1 year ago, we demonstrated something else. Hegemony from any quarter is not a fatality. There is a path for innovation, independence, and strategic autonomy. And this path, I'm convinced, is one of the countries like France and India must take together. And we've already achieved a lot. If we speak about models, you perfectly described the acceleration and the diversity of this model. India made a deliberate sovereign choice. SML, small language models. Task-specific, designed to run on a smartphone. And India built the first government-funded AI and deployed 38,000 GPUs at the cheapest rates to every startup in the country, as you perfectly described, Mr. Minister.
And we just heard from Emmanuel Macron, the French president, who made his trip from Mumbai to New Delhi to make his keynote address that you're hearing from the man today. Now, a Japanese maker of a key AI server component says U.S. tech tensions with China are forcing them to diversify supply chains. Our conversation with Murata Manufacturing's president is next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from New Delhi. Valuations in the countries in Japan stocks are at the highest in decades. This comes after a Buy Japan rally took off following Prime Minister Sanae Takaichi's decisive election victory. Now investors are questioning how much upside remains. Let's bring in our Japan equities reporter, Alice French. And Alice, it does seem like it's buy Japan.
Absolutely. Hello. Yes. I mean, I think the question is now, did people get a bit carried away, right? We saw that really nice rally early last week after Takaichi's historic win in the election. Of course, lots of excitement about the fact that this brings, of course, political stability after her ruling Liberal Democratic Party had been in a minority in both houses. She's now got that historic majority, and we saw the Nikkei and Anthropic rallying about 4 or 5% after that outcome. But if we look at kind of the technicals underpinning this, you know, the topics, that broader index, it's trading around 18 times forward earnings, and that's up in, you know, the highest value in the last 20 years. We've got the Nikkei, that more tech-heavy index. Now the PE ratio up there kind of almost equal with the Nasdaq, which is quite something. We've got that Nikkei index kind of approaching the 60,000 mark, which is it's pretty crazy, because I remember it hitting 40,000 or 50,000. Now we're already talking about 60,000. So I think there is a sense, you know, that perhaps there's a little bit of overbuying going on. There's a little bit of overvaluation, and the caution is starting to set in. And I think we've kind of seen that in the last few trading sessions. Things have calmed down a little bit. We've had a few down days, particularly those kind of large cap tech names, some of the financials seeing a little bit of profit taking. And yeah, the question now is really, how long can this be sustained for, and how much higher can things go?
But Alice, this is the new Japan, isn't it? I mean, the old, I guess, valuation regime, well, doesn't cut it anymore.
Absolutely. I mean, look, you know, it's worth saying that this rally that we saw after the election is really just a continuation, as you say. It's something that this kind of shift that we've been seeing happening over the past really couple of years. Now, of course, we've got corporate governance reforms underpinning all of this. We've seen a lot of activist investors, a lot of foreign investors piling into the market, looking to kind of unlock that value. Of course, we've also got a weak yen, and I know it has strengthened slightly in the past few weeks, but it's still really, you know, it's weaker than 150 to the dollar. It's down around those weak levels, and that's really a tailwind for exporters too. And I do think globally investors are just looking at Japan as more of an opportunity than they have in many years, and especially as people try to diversify away from the States. We know that we have had that kind of diversification of capital since Liberation Day. I think Japan is really up there, you know, among people's top picks because of those, you know, those yen tailwinds. And now we of course have the Takaichi trade, right? You know, this excitement around her fiscal expansion, the money that she's going to pour into defense and AI and quantum computing and nuclear, and, you know, all of these sectors that stand to benefit. So I do think there is still optimism there, particularly among the kind of global investor community, but certainly here on the ground in Tokyo, among kind of local strategists and fund managers, we are starting to hear that caution creep in.
That's right. Even though stars are aligned right now. Alice French, Bloomberg Japan equities reporter, we thank you so much for that. Now let's get back to New Delhi, where I am. Live pictures of New Delhi as the India AI Impact Summit gets underway. French President Emmanuel Macron is still speaking. Let's listen in again.
For children under 15 years old. And we are committed here in this journey with a lot of several European countries being present here today. Greece, Spain. I know, Mr. Prime Minister, you will join this club. And this is a great news that India will join such an approach in order to protect children and teenagers. And we stand ready to take all necessary actions to ensure that our young citizens are truly safe, and wish to engage with all willing partners to make this vision happen for all. And this is a new coalition of willings in order to protect our children and teenagers. Protecting our children is not regulation as well, it is civilization. To conclude, the message I have come to convey is that we are determined to continue to shape the rules of the game, and to do with our allies, such as India, because we believe in core shared values: science, rule of law, global balance, efficient multilateralism, innovation for the benefit of all. Now is the time to channel our forces toward what works. Concrete action and solutions that make AI more sustainable, efficient, and accessible. Targeted funding to leverage talents and creativity. Appropriate rules to prevent abuse and protect all our citizens. Strong partnerships that help build new AI solutions, more safe and more sustainable. I want to thank all the governments and business leaders present in this room and engaged in this journey. I know your goodwill and now your commitment in order to deliver these concrete results. We do believe in innovation, but we do believe in a better place, in a better world as well. And I don't believe one second it's incompatible. And let me say one more thing about partnerships, because this is not a two-player game. Last week, India and the UAE announced a joint AI partnership, a supercomputing cluster, shared data centers and innovation corridor. And India brings the engineers and the frugal models, and the Gulf brings the capital and the infrastructure. And together, they build faster than either could alone. France knows this equation well. With UAE, we engaged and they committed billions of euros for innovation and data centers in our country, and this partnership creates more value together. This is not dependency. This is intelligent convergence between governments, with companies, large caps, startups. And this is clearly this intelligent convergence which can provide results. The old world said you compete or you lose. The new world says you connect or you fall behind. And I started with a story about a street vendor in Mumbai. 10 years ago, the world told India that 1.4 billion people could not be brought into the digital economy. India proved them wrong. Today, some say AI is a game only the biggest can play. That you need $400 billion to be in the race. That nothing can exist between the two blocks. India, France, Europe, together with our partners, those who believe in our approach, companies, governments, investors, might have a different way. The money race is important and we cannot discount it. But the outcomes and real value creation for our population is even more. The future of AI will be built by those who combine innovation and responsibility, technology with humanity. And India and France will help to shape this future together. And the journey has just begun. Jai Ho. Thank you.
President Emmanuel Macron talking about how AI is now a field of strategic competition. Of course, this is coming on the back of rising tensions within the US and China in the space of tech. This is Bloomberg.